Good morning. So welcome to our webinar today. So my name is Leo Wertley. I am Senior Project Manager and UK Desk Manager in SCHNEIDER Group. So I'm personally located in the Moscow office, so our HQ and largest office. But obviously we're talking about not only Russia today, but Ukraine, Belarus, Poland, Kazakhstan, where we also have offices as well. So yeah, maybe also a few words about SCHNEIDER Group. For those who don't know, we assist foreign companies to enter and expand within the aforementioned markets. And today we'll be looking at a slightly alternative way of entering these markets. So why don't we dive right in? So an overview of what we're actually going to be looking at today. So we'll start off by having a quick look at all of the markets, so Ukraine, Kazakhstan, Belarus, Poland and Russia, having a SWOT analysis of these and focusing really on the opportunities available as well. So we'll be talking about how to use these opportunities. So I'll give an overview of the solution that SCHNEIDER Group has developed called Market Entry Fast Track, which is a really great way to utilize some of these opportunities without committing to too many investments. Look at some case studies of companies who have used this solution in the past. And since it's definitely worth having a particular note on e-commerce, which is very much developing across all of these markets, we'll take Russia as an example and have a closer look at the e-commerce industry in Russia at the end of the presentation. So let's start off with the country overviews. In general, let's take the World Bank Ease of Doing Business report, so quite a standard rating of ease of doing business. Across the board, we can see that all of the countries have increased from 2016 to 2017 in their overall positions. Perhaps particularly noteworthy is Poland in at number 24, and actually number 1 in trading across borders, which is very interesting. Kazakhstan number 3 in protecting minority investors. And yeah, all of these countries really improved year on year. So taking a look at Ukraine, as mentioned, I won't try and spend too much time on each of these individual SWOT analysis, perhaps just pick out the main points of each of them. So yeah, Ukraine, start off with the strengths. Obviously the population size and the tactical geographical location of the country, and also a highly educated population providing cheap, relatively cheap labor in any case. Some weaknesses, we don't actually have the political situation down here, which should definitely be up the top of there. I think this is in threats instead. But yeah, politically, we all know the last couple of years not being so great there. Also corruption, which is a bit of a repeated story across some of these markets as a weakness. Opportunities, a very strong IT sector, which is also typical, as we will see across these markets. Growth forecasts in terms of GDP of 2.5% forecasted for 2017, and declining inflation from 12.4% in 2016, predicted to go down to 8.5% this year. Some threats would be the East-West political split. So in terms of public opinion, obviously we have the East-West split, which can cause internal turmoil, and further political volatility would be a threat for the future for the Ukrainian market. Taking a look at Kazakhstan, some of the main points to pick out. I think this number 2 in the strengths is really key, so it's a central point of the new Silk Road. Very tactical location. In a similar way to Russia, they've been developing special economic zones, and also the government trying their best to attract as much foreign investment as possible through these means, so offering preferable investment environments. Some weaknesses, obviously it's a commodity economy, it's very dependent on commodity prices. Also, another typical story across these countries, very volatile currency in recent times, with strong devaluation as well. Some opportunities, we mentioned the Silk Road, particularly in the sphere of logistics, many opportunities there for Kazakhstan. And also the big expo upcoming this year can be very much used as a marketing tool for foreign companies who want to get their name out there. Some threats, if the oil price doesn't increase, then maybe the economy will stay sort of reasonably stagnant, and general economic slowdown risks. So taking a look at Belarus, one strength I would very much like to add is the IT sector. A lot of companies looking to use Belarus as the new IT nearshoring. So whereas in the past they've used countries like India as their IT base. Moving towards Belarus due to the well-educated workforce, relatively cheap labor in terms of IT. Some weaknesses, still in a recession, so predicted minus 0.9, nearly minus 1% GDP change for this year. Relatively high inflation. Obviously, bureaucracy and corruption, we all know, in Belarus can be a bit of a problem. Some opportunities. So with the Eurasian Economic Union, Belarus can be used by companies as a logistics center. So once you get the goods into Belarus, you can then distribute them amongst the Eurasian Economic Union countries without paying further customs fees. It's literally just the logistics cost that you have to take care of. A highly qualified workforce, also relatively cheap. Some threats for the future. Not all foreign investors, have Belarus on their investment map, so to speak. And also, the governmental situation right now, not so preferably viewed in Europe particularly. So Poland, perhaps a market that's a bit closer to everyone's home, closer to Europe. So some strengths would be that it's really quite integrated into the European production chain. A lot of foreign producers there having production facilities in Poland. Some weaknesses, one that's particularly worth noteworthy, the second point, high structural unemployment. So it's particularly in the east, which is an area that's very underdeveloped. There's high structural employment and low women employment rates. So this lack of development in the east can also be seen as an opportunity. So this is down on the opportunity front for Poland. Also good predictions in terms of economic growth, and it has quite a lot of assistance from the funding from the EU. Some threats would be deterioration of the political and social situation. So finally, we'll have a look at Russia, the overview. Again, very highly qualified IT workforce, relatively cheap. Obviously, lots of natural resources and access to affordable energy for local companies anyway. And a very big consumer base. Some weaknesses, poor industry diversification. A key point, obviously Russia has been over-reliant on the export of natural resources. There's a lot of gaps in production particularly, which is an underlying economic factor. Volatility of the ruble in recent times. I mean, we've seen a little bit of a strengthening and stabilization over the last few months, but in recent years it's been very volatile. Opportunities. So also a lot of government investment going into special economic zones, investment contracts for localizing production and for companies localizing. Big demand for foreign and modern technology. So again, lacking in production locally, Russia looks for foreign expertise, giving lots of opportunities for foreign companies. Threats for the future, again, corruption, and also the lack of infrastructure could be a threat for the future of Russia. So obviously we're looking at Russia. It makes sense to have a quick look at the sanctions. So hopefully try not to be too overwhelmed by this at first glance, rather complicated looking slide, but actually it's relatively simple if I can break it down for you. So we have the four main indicators here. We have industrial production, the black line. We have investment, the red line, construction, the grey line, and then GDP is actually the bars on the bar chart. So what we really want to show with this slide is that maybe looking at the history, we can see that around the 2008 financial crisis, we have the big dip of GDP. By the second orange line, we're breaking out of the crisis, not quite to pre-crisis levels, but GDP really picks up and is quite stable right up until sort of mid-end 2012. And this is the key point here, because we can see already at this point, around the end of 2012, GDP is starting to fall. And it's going down and down and down before you see the green line, the actual hitting of the sanctions when they were implemented, the GDP was already reducing. So although the sanctions and the oil price may have did contribute to the overall lack of dive in GDP, it wasn't the underlying cause, which was, as I said before, the structural inefficiencies, the lack of diversification of production, and this is really what gives rise to the opportunities for foreign companies and foreign producers with foreign technology. And all of this worth noting between the last two orange lines, this is all despite investment of about 1 trillion rubles from state, so state intervention, which we still saw very low GDP. So yeah, opportunities for foreign companies. We've seen them just in the example for Russia there. Across the board, apart from Kazakhstan, we see IT, very high on the list of opportunities. For Russia, we have pharma, automotive, agriculture, very big now, and yeah, building materials and infrastructure. For Poland, we have machinery, steel, again, automotive, biotech, aviation. Ukraine, because of its tactical position, the same as Kazakhstan, logistics is a big one, big opportunity in demand. Agriculture for Ukraine as well. And then, yeah, Belarus, we talked about the IT nearshoring. This is a big opportunity. Renewable energy, yeah, bio and pharma, also a big factor in Belarus as well. So really, a lot of opportunities, and the opportunity to exploit these also via e-commerce. Very much worth noting that across the board, all of these countries have quite new e-commerce and developing e-commerce markets. So in the early stages of development, we've seen rapid double-digit growth almost across the board in the last 3 years for basically all these markets, which are not saturated. So increase of internet usage, especially in the remote areas where we have large populations. Better access to mobile connections across the board, as well as increasing volumes of national and international shipments via the e-commerce model. So goods actually ordered in online shops, both locally and abroad. So yeah, just some figures. Obviously, Kazakhstan here, we can see really big increases. Russia, I mean, it looks like it's not quite as much, for example, as Kazakhstan, but still 28% 2016 growth, really across all of these countries. E-commerce industry very much booming. And also worth, if I go back a few slides, so yeah, this is between the period, let's say, of 2012 to 2016, when we have in Russia the crisis, and we still have double-digit yeah, growth in the e-commerce industry. So while everything else is slowing down, e-commerce booming. So yeah, this brings us to the second part of the presentation today. We know the opportunities exist. How can we actually exploit them? So let's look first of all at how companies would typically enter a foreign market. So particularly looking at foreign producers. So on the left we have model number 1, which is finding the foreign distributor. So the producing company stays within their local market and just finds a foreign distributor to take care of the import and the distribution of the products on the local market. It can be one, it can be several distributors. On the right-hand side of the equation, we have option number 2, which would be setting up a company, so either a representative office, a branch office, or a LLC, a full subsidiary. Obviously, advantages of each of these, but also quite some disadvantages for all of these options. So looking at the distributor model, a lot of the time the clients are very much dependent on the distributor. The foreign producer doesn't have contact with the final customer who deals exclusively with the distributor. This can cause a lack of transparency for the foreign producer and the exporter. It's not always 100% sure whether the distributor will be using the proper import methods or will they be actually employing grey import schemes. Now, such schemes can actually produce tax risks for the foreign producing company, and also the risk of the good being completely banned from the local market altogether. We've seen this happen in the past. The distributor may not be completely focused on the business development, the sales and marketing of your particular product or your key products, which can also be hindered by the fact that they have your competitors' products in their portfolio as well. So not enough of a focus on the sales and marketing side of things. Yeah, going on to the second option, so if not via distributor, setting up your own office. Also, some downsides include the amount of time it can take to actually register or accreditate the branch, subsidiary, or rep office. So it can be between 3 and 5 months on average. We have further time expenses in terms of the piles of documents that are required, translation of these documents, notarization, which can also be quite expensive, particularly in the UK. Bank account opening, finding a local legal address, general director, the list goes on. So there's quite a lot to really think about. Financially, you have to think about the charter capital. How are you going to finance the company? What's the best way, taking into account, the tax aspects, double taxation treaties. You have to take care of the back office functions. So the accounting, the tax, find yourself a local office. So really a lot to think about. And so for companies who just want to actually just test out the market, if companies aren't completely sure that it's the right market for them or their product will really sell, then these may not be the best options. Which brings me on to the Schneider Group solution. This is why we sort of thought up our alternative to market entry, which is what I will present just now. So yeah, we call it our market entry fast track service. It basically combines a number of elements which would give our clients or a foreign company complete comprehensive market entry without the need of actually opening up a office. So it revolves around the idea of outstaffing, which is sort of similar to the traditional personnel leasing model. The provision of a full office-in-office infrastructure, and also the possibility to set up a sales office if required. So let's break these down a bit, starting with outstaffing. So what we would do is, if necessary, we would recruit a person on the local market. This is in Russia, Kazakhstan, Belarus, Poland, Ukraine, wherever needed. We offer the same thing in all of these countries. So we would recruit the person, get the relevant work permits and work visas as necessary. And then the third point is the key point. So we would hire them with an employment contract, so they would officially become an employee of Schneider Group, which is how you get the person on the ground without registering the company. Taking care of all the HR administration as well, payroll. Provide this employee with the full office infrastructure. So we give them a workplace, provide them with everything they need to work, so phone line, internet connection. This person can use the conference rooms here as well, for meeting business partners, for example. Provision of a business address and a concierge. And then if necessary, setting up the sales office via us. We would take care of product certification, the customs clearance of the goods, the warehouse rental if necessary, and also the full logistics. So really the client or the foreign producer wouldn't have to worry about any of the back office functions. They're all taken care of. And yeah, obviously a good way to start off this would be, as we've seen in the past, a market study or a market analysis and business partner search. So really actually just finding out, is the market a relevant one for me? So this could involve the typical questions such as, are there actually sales opportunities for my goods and services? Is the market ready for it? If yes, out of my competitors, who's already actually present in the market? And at which price do the similar goods to mine actually sell at? So this is essential information to start off with. As I said, recruiting and hiring we can take care of. So finding maybe 3, 4, 5 candidates from your industry with in-depth knowledge that really meet your requirements. We would hire them. And as I said, obtain all the necessary migrational documentation that may be required. So I mentioned at the start that the solution really revolves around the idea of outstaffing. So I want to just break down exactly what it is, because sometimes there's confusion around this. It's not exactly the same as the traditional personnel leasing model. So if we have the company based in Europe, so on the left-hand side, who wants to enter Russia with people on the ground, but without actually having to set up a company. So how it works, the local service provider, so in this case Schneider Group, would conclude an outstaffing contract with the foreign company. We would take on the employee with a labor contract, so they technically become a Schneider Group employee. However, they would be reporting to you. You would control the work of this employee. Any authorization that's needed, for example, for business trips, etc., holidays, that would all go via your company. We would receive the confirmation from you. We pay out their salary. We do all the relevant HR documentation, really taking care of all the back office functions and also paying of the taxes and social contributions accordingly. So what this really means is you get a person on the ground working exclusively for you. You will manage this employee, control this employee, while all of the back office functions are taken care of by us. So yeah, this is how you get the employees on the ground. As mentioned, we give them, within our approach to this solution anyway, we give them the whole infrastructure. So as mentioned, the work desk and chair, telephone, internet, whatever they need. They can use our kitchen, all the consumables, tea, coffee, whatever, exactly as if they were actually an employee of Schneider Group, like any of my other colleagues. Office management and cleaning obviously included. In Moscow, for example, we have a whole floor dedicated to conference rooms, and we have conference rooms in all of our offices across all of the countries mentioned. So these can be used for meetings with business partners. Looks very professional, inviting them into what is essentially their own office. Using the rooms for events, etc. if necessary. the provision of a business address would mean that the client gets their company logo on the door, so further adding to the comprehensiveness of the local presence. You get your own phone line, so our secretaries would receive the call coming in from your company. We see that it's for you, and they answer on behalf of the client company and then forward on the call. And yeah, same with any incoming correspondence. The concierge service, if necessary, we can also provide somebody to take care of coordination for HQ and the local staff, so anything from booking airplane tickets, train tickets, hotels, whatever needs to be done. And this brings me on to the final part, so the actual sales unit. How does this work? So to actually get the products into the country, you need to certify them. To do this, you need a local office. So if you haven't actually got a local company, this can be tricky. What we do is we take care of this for you via our LLC. So we do the product certification. We would purchase the goods from the foreign manufacturer. Using our electronic key, we take care of the customs declaration, the customs clearance. So we basically act as the agent, getting the goods into the country. If necessary, we take care of the warehousing, and we do the warehouse rental and logistics coordination. So getting the goods really from A to Z to the final consumer and actually selling the goods onto the final customer. So this is how you set up the sales office without having the company. So just to summarize the fast track approach, yeah, it seems very comprehensive, and there is the possibility of taking this full comprehensive solution, but also bear in mind you can pick and choose basically from whatever you need. So you don't have to have everything. If you want people on the ground, you implement the outstaffing and then choose whatever else is actually necessary for the client in his specific situation. So the client benefits from a very quick entry into the market. So we can do this within, I mean, if everything goes very, very smoothly, within the case of, a few days, if you've already found the right candidate. So avoids registering the company, which is very key. You get full control over your own employee who's located on the ground. So this employee is concentrating solely on your products, on your business, your business development and marketing, and can even establish the whole comprehensive sales unit. And yeah, it's a very, very flexible approach, as I'll give a couple of case studies in the slides to come. The next steps could be either founding a legal entity, or if necessary, market exit is possible without having committed any resources, and very abruptly offers the opportunities to actually leave the market if for whatever reason it doesn't quite go to plan. So yeah, let's look at a couple of case studies now. The first one would be for a successful start using the fast track model. So these are live, real case studies from our experience with our clients. So we had a German exporting company who didn't have any offices or subsidiaries anywhere else apart from Germany. So pure exporter. They were exporting already to Russia to a long-term trusted business partner locally. After quite some time successful cooperation with this Russian business partner, the Russian company said, hey, we think it would be a very good idea for you guys to actually open up an office in Russia. We could really enhance our cooperation and expand our business together. The German company, obviously having not done anything like this before, and starting off with Russia, which seems to them to be quite a risky market, they weren't willing to go ahead and open the office straight away. But they definitely saw the opportunities were there, and the opportunity for expansion was there. So what they did is, in 2012, they implemented the fast track solution with us. They had, I think, 2 employees in our Moscow office. And after around a year, they decided, okay, everything's going very well. Business is expanding as expected, or as we hoped, and they opened their subsidiary. So yeah, this was 4 years ago. To this day, they still have their subsidiary. They have 4 employees in there, so the outstaffers were switched from Schneider Group into the local subsidiary, and they're still taking care of the import and business today. So this shows a successful start, how you can test out the market and then move on to the next step. Let's look at a slightly different case study. Again, another real case study from our experience. We had an American client who was in the high technology sector. They had a very, very specific product or set of products which they wanted to test out in Russia. So they weren't sure whether the market was actually ready for the product yet. So they also implemented the fast track model, 2 outstaffers in Moscow to take care of the sales and marketing, traveling all around the country. After 1 year, they decided that business wasn't going as they hoped, that the market actually was not yet ready for the product and decided, yeah, we want to stop our activities. So very abruptly they were able to bring these activities to a halt. If, for example, they'd have registered a company, you'd then have to deal with the liquidation. It can take up to 2 years, for example. But they were able to really put a stop to it straight away and withdraw from the market. Yeah, so the fast track allowed them to minimize the financial risks from day one and ensured minimal losses. And obviously no regrets from them as well, because they still were able to get the information they needed. They figured out that it wasn't actually ready for the product yet, which helped them to contribute towards their overall business strategy. So yeah, this really shows the flexibility of the service. So very final part of the presentation today. I think it's very much worth noting e-commerce, taking Russia as an example. As I said, really across the board, this is an opportunity which should not be missed. So yeah, we'll look at e-commerce. Forgive me. So, in Russia, we're talking about the e-commerce market, both cross-border and locally with this slide. So we can see year-on-year growth quite comprehensively between 2013 to 14, 31%, going up 7% to 2015. And actually, in 2015, it was predicted that the market would increase by 15% to 2016, despite the the crisis, despite the lack of growth in GDP. What we actually saw in reality was much greater increases. So from the year-on-year growth from the first half of 2015 to 2016, 26%, so double-digit figures, at a time where other markets were plummeting. Industry, sorry. So what are the main interested segments? So what do people actually buy specifically related to foreign online shops? So not within Russia, but foreign online shops. We can see that electronic and household appliances making up for 32%. Clothes and shoes also quite high. So actually when you put together fashion and electronic household appliances, this is making up for about 2/3 of the overall purchases. And then yeah, you can see quite a few other industries there, so quite a diverse set of products being purchased. So what the situation looks like right now is, again, when we're talking here about pure cross-border sales, so a Russian customer putting an order into a foreign online shop. So at the moment, for goods with a value up to 1,000 euros and a weight of 31 kilograms, there's no certification necessary, and there's no customs duties for such goods. This might seem quite big on first glance, but worth noting this 1,000 euro limit, this is actually the customs value. This isn't the value at which the good is purchased, not the purchasing price, but it includes, logistics, it includes insurance, right the way up until the border. So not quite as big as first glance. Predicted, lobbying for the decrease of the above mentioned financial limit. So this is expected to go down from 1,000 right now, 1,000 euros, to about 200 euros in 2019. And this could even be made far less. So we have the Association of Internet Trade Companies who are taking it one step further. They're actually lobbying to block any online foreign websites or purchasing from online foreign websites who haven't actually registered in Russia with the tax authorities and aren't paying tax. And they want to actually decrease the 1,000 euro limit down to 22 euros, which is European standards, to promote equality between foreign and local online shops. Obviously, if this was to happen, it would change the whole picture, because even shipping a good from Europe to Russia, the logistics costs alone are going to come close to at least the $20 euro mark. So yeah, customs clearance and certification under this method would be necessary for almost all products. So we're seeing quite a few big players. Kupivip and Ozone, other big players already reacting to these predicted changes. So they're actually planning to outsource their warehouses out of Russia. So moving the warehouses from Russia to abroad to start cross-border sales. So shipping the goods individually to the final customer to try and reduce the value of each shipment, rather than having big loads coming into their warehouse in Russia, in an attempt to avoid the customs payments and certification costs. And yeah, the conclusion, the final point to really take from this is that there's high pressure on the Eurasian Commission to really speed up the process, to reduce the levels from 1,000 further down, and really minimize cross-border sales of the e-commerce model. So we took a slightly different approach to the some of the big market players, such as Ozone, as formerly mentioned. We see a different approach would be the optimal solution to really tapping into these markets via e-commerce. So we came up with a solution, an all-in-one package, which would enable our clients or foreign businesses to access the e-commerce market in Russia, the massive client base available, by basically providing a comprehensive local solution. So we'd set up the website, localize it to meet Russian standards. We would take care of all the back office stuff, so the import, customs clearance and distribution locally. The foreign manufacturer wouldn't need to register a company for this. So they would receive from us the management of orders, client payments, logistics, delivery to the final client, everything really taken care of for them on their behalf. So all they would have to worry about is producing the goods and sending them over. So how does it work? Taking an overview of the process, we have the foreign manufacturer, so in this case a European company who wishes to sell goods via the e-commerce model in Russia. So what we would do is actually import all the goods for this this company. This is how we see it anyway. Get the goods already into a warehouse located in Russia. So we would, for example, here provide the customs clearance or the logistics as previously mentioned. In parallel, set up an online shop in Russia. So perhaps taking the online shop that already exists for this company, really localizing it to meet Russian legislative requirements and all the Russian local specifics, which we'll go through in a minute. So we have the e-shop set up, and when a customer would put in the order to the online shop, we think it also necessary to have a hotline service there. So in Russia, this is another Russia specific, when a consumer puts in the order, they will be expecting a call from a sales representative to really confirm the order. So this could be, is it the right color, shape, size, for example, is the address, the name all relevant, all correct? And the consumer would really expect this to happen, this call to take place. There would also be any consultation on the products. So automatically the order would be sent to the ERP system, for example, which we would set up and have here in Schneider Group. We'd automatically receive the information, so we set up these IT automations, receive the order, and send that also on an automatic basis to the warehouse, who will do the fulfillment, the pick and pack. Throughout this whole process, the foreign company would have remote access to the ERP system to see, what orders are coming in, which goods are selling the best, when do we need to get the next shipment of stock coming in. And so, the warehouse receives the orders, informs the transport companies, who would then pick them up and deliver it to the final customer in Russia. A very important point regarding the transport company, another Russian specific, is that consumers like to be able to pay in cash upon delivery. So actually, the payment online payment processes aren't quite as widespread in the markets we'd be looking at today as they are, for example, in Europe. So cash payment can be quite essential. So it offers advantages both for the foreign company and also for the final consumer. So compared to cross-border sales, the consumer would receive the Russian-speaking, so local hotline service, very fast delivery times when compared to cross-border because the goods are already located in the warehouse. You'd get processing of returns much easier, fewer lost items, and this would amount to overall higher consumer and customer satisfaction rates, and your brand perception would also benefit from this accordingly. We spoke about the option of paying in cash upon delivery of being quite important. We also think it's quite necessary to set up the online shop to cater for other widespread online payment methods here in Russia at least, such as Yandex Money, Kiwi. So this also needs to be thought about and taken care of. So really to summarize it, we would see it in this way. So in terms of legal aspects, we would be taking care of the terms and conditions, localizing them to really meet Russian requirements, dealing with intellectual property as well if you want to be the only company importing these goods and selling them, in Russia. We take care of that as well as the consumer protection. Yeah, in terms of import, we would do, as mentioned, the customs clearance, the logistics handling, product certification. Logistics-wise, take care of the warehousing, fulfillment, pick and pack, delivery to the final client, including all the payment methods spoke about before. And these payment methods are really expanding the potential client base. So yeah, back office wise, we would set up the ERP system. We do all the relevant accounting, so all the foreign company is concentrated on is producing the goods. We would host the online shop on our service located in Russia. So for Russia, you may know about the Federal Law 152, came into force about the protection of personal data of Russian citizens. So this law really dictates that any personal data of Russian citizens has to be stored on and processed on servers located within Russia. So you would be completely compliant with this. As we've seen recently with the blocking of LinkedIn, for example, this should really be taken seriously, because LinkedIn now is completely blocked in Russia because they didn't take this law seriously. So yeah, you get the hotline service and also the accounting work taken care of. So what does the foreign manufacturer actually receive from this? It's an individualized online shop with only your products, only your brands in it, no goods of your competitors. Very short delivery times, as mentioned, as compared to international deliveries via the traditional e-commerce model. Multiple payment options means more potential customers. Yeah, an important point, you will have actually the tools to generate your own marketing strategies, have direct contact with the consumers, meaning you're getting all the insights, all the information that you need back to generate your individualized marketing strategy for the local market. And yeah, obviously you get control of the final price. You can dictate at which price the goods are sold. 100% compliance with import regulations. And yeah, you don't need to register a company, recruit any staff, which means saving as costs. And yeah, finally, it's around 2 months this whole infrastructure from start to finish can be set up before we can actually start selling and operating the online shop. So quite some advantages for the foreign company. Very final slide, just to stick it all in a nutshell. It's a complete e-commerce solution with all the logistics from A to Z taken care of, all the technical aspects taken care of, order management, payment collection, and 100% compliant with all local legislative requirements in all aspects. So yeah, actually a little bit sooner than expected. End of the presentation now, so we will go on to questions. I'll be very happy to answer as many as I possibly can. I'll say in advance that we actually, before the webinar today, contacted some of you to see if you had any questions in advance, and there was a lot actually tailored towards import, towards certification and logistics. What I can say straight away is I won't answer those today because we have a second webinar upcoming when all of this will be addressed. So my colleague and head of import department here, who's really the import specialist, will take care of these matters during our webinar in June. And then in the meantime, the individual questions, we can get back to you on an individual basis for these as well, either via email or call, whatever's best. So yeah, looking at some of the questions that have come in. So yeah, first of all, how did the laws surrounding, the new laws surrounding secondment in Russia, so outstaffing in Russia, affect the provision of our outstaffing services? Good question. So, I mean, the law isn't, I mean, it's relatively new. I think it was the beginning of 2016, but already come into force a while ago. This law basically dictated that any company who wants to provide outstaffing services, particularly in Russia, has to be accredited. So you have to go through state registration and receive accreditation from the state authorities to actually provide these services. There's quite some requirements for these companies related to activities, past track record, size of the charter capital, for example, and really quite some stringent, prerequisites to receive this accreditation. I can say SCHNEIDER Group, for example, we went through the process, have the accreditation, which is what allows us to actually provide this service. So sometimes people get confused with this law, thinking that it actually forbids outstaffing services. It doesn't. It just means that you need to be an accredited company such as SCHNEIDER Group to provide them. And then the second part of this question, are there actually any restrictions regarding the activities that can be performed by an outstaffer? So In my experience, at least, most of the time foreign companies want to employ the fast-track method and get an outstaff on the ground, mainly for a sales, marketing, business development position, either in actual parallel to a distributor. I didn't mention it before, it can be actually done in parallel to a distributor. It doesn't have to be an alternative. And yeah, mainly sales and marketing activities. So this is fine, and it's absolutely allowed, no restrictions. Other positions are possible. The only real restrictions is when, for example, it would be the employing company by law would have to have a specific license to hire such an employee. So we, for example, at Schneider Group wouldn't take on an employee who's going to be going to do dangerous work on an oil rig or, you know, on a dangerous construction site. You have to be an accredited company holding the relevant licenses. So that would be one restriction. On a slightly different note, actually, but connected to this question, there's two different types of contracts which can be concluded for outstaffing services. So, yeah, first of all, it's a typical outstaffing contract. This is restricted to 8 months, and also the foreign company under this typical outstaffing contract has to pay VAT on the services. So, unfortunately, that would mean 18% in Russia, additional costs for outstaffing services. The second option is the one that we prefer, which would be concluding just a general consulting agreement with the foreign company, outlining basically in the subject of the agreement would be the position and responsibilities of the worker. This means it's a consulting agreement to a foreign company without any offices in the local country, which means you can render the services without VAT, saving 18%. So, sorry, a little bit off track there, but that's an important point to note as well. So the next question, how much does it cost? Good, straight to the point. I'm not sure whether this is relating to fast track or e-commerce, so I'll talk about both. Yeah, so in terms of fast track, as I mentioned, you can either take the full comprehensive package or just pick and match. So usually outstaffing is the main service. This is from around 300 euros in most of the, yeah, so Kazakhstan, Belarus, etc. In Russia, starting from about 500. If you take the full entire package to have the complete infrastructure we looked at, maybe around 1,600 starting price. Yeah, e-commerce, again, really depends on the specifics, but cost-wise, we're looking at starting from around 1,600 monthly. So yeah, that's, yeah, in terms of costs. The other questions I see, as I said, mainly relating to imports, so we'll get back to you on an individual basis for these. We will address them via Yelen, my colleague, head of import department. She'll be very happy to get back individually. And also don't forget about the webinar coming up on import, certification and logistics in June. You can look at the Schneider Group website as well and actually subscribe to our newsletter, which will inform you about any upcoming events so that you don't miss them as well. So please subscribe to the newsletter. And that's it for today. Thank you very much for joining. I hope it was useful. Hope it was interesting. You can see my email address here. So any further questions or any points that we didn't address here or didn't answer, feel free to drop me an email. I'll try and get back to you all as quickly as possible. We can either set up a call or just answer via email, whatever's best for you. Thank you very much.